It's another edition of Cattle Chatter. I'm Susan Littlefield. We can have weeks upon weeks of amazing discussions where we just kind of sit back and think, all right, we're doing pretty good in this cattle market. And then Mother Nature of the markets kind of slaps us in the face and says, hey, back to reality. And we're going to deal with a little bit of that going on today about why we're seeing the drop we saw in the trade. And this is something Brad has been reminding us for a while, to be prepared. As you just heard me mention him, it's Brad Kooima. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's kind of start there, because some say we're severely overbought in the trade. Some say, well, this is about the time we should start to see a move down anyways. What is your takeaway to what you're currently seeing in this market?
Thanks for having me on, Susan. And like you hinted at there in our little preamble, it's certainly a lot more fun to talk about it when you're making new highs, and I enjoy that much more too. But to try to unpack what your question is about and what's happening here is you got a very overbought market, okay, statistically, and that's a math problem. That's what has the market gone up quicker than what's normal as a percentage. It's a math formula, and so it takes the object or the subjectivity out of it, of whether you think it's too high or not. And we've been in that overbought state, or that unusual stage for a while. I mean, it doesn't take a rocket scientist to figure out that, when you rally $20-some in this, basically 3 weeks or just a little bit more, that's what's going to happen. So now we could have said that last week and watch the market march on right on past you and go higher yet. But you gotta, you have the ingredients for a bad piece of pie here, right? All-time highs, very overbought. Whenever the market gets high, it's one thing, you'll get violent corrections, but we're talking all-time highs, and not by a little ways. I mean, we've never ever been anywhere near this high, so I think I'm not going to be able to make sense and explain this to where everybody's going to feel good about it. And I'm not certainly going to pretend that I somehow knew yesterday at 10 o'clock that you had to magically sell new highs. Nobody does, but I would remind you that unfortunately the cattle market, the nature of the beast here is that's the way they make tops. You go straight up and then just absolutely give up and go straight back down. Now, way back 100 years ago, I was taught that there are some qualifiers to what you call a reversal. And a reversal is something that happens from a terminal area. A terminal area is just a fancy way of saying an important area on a chart. Well, I don't know anything more important than all-time highs, right? It should be done on high volume. Well, we traded 142,000 volume yesterday. Huge. Open interest up huge also yesterday. And then the third thing is the market, you have to have follow through. Well, unfortunately, feeder cattle are over $6 lower, and August cattle are over $3.50 lower. So we had follow through today. So you've got you got the ingredients for what any technician is going to call a key reversal. So we got to work through that. How'd we get there? I'm sorry, I'm not letting you ask me a question here, and so there's lots to talk about. Okay. It would appear, and of course, this is the old guy here. I mean, and there's no pits anymore. Otherwise, I'd give you a better idea of that. But it would appear as though yesterday's action in particular was one of those times where it feels like something, somebody, some group of or segment or a fund that had a bad position on, in other words, they were short, and finally just gave up and bought it, and bought it and bought it and bought it. And then when that buying was finally over, you hit this big air pocket between the next, where the market will go to the orders. And then once it starts, it gets emotional, and then you got anybody that wish they would have sold cattle or thought they should have sold cattle or why. And that's what yesterday was about. And unfortunately, we got some follow through today again.
Can we say that the top temporarily, and I use the word temporarily, has been put in place for these futures?
I figure your listeners are going to want to, what does Brad think it's over or not? I think for now it is. I think this is a short-term top. I hope I'm wrong. As I look at the long-term fundamentals, do I see that there's a supply problem tomorrow? Not at all. Not at all. In fact, cash market's higher this week. Today, it's higher than it was yesterday. Okay, in spite of it all. So we can talk about that with basis here in a little bit. But if I had to guess it, if if you start to come off the highs far enough that you lose a little bit of the fund interest here, hey, it's the middle of May. This wouldn't be the first time that a market seasonally makes a top in this area, right? I mean, so this time frame. So, again, we've been trying to, warn you to be a little cautious. Hopefully we've got some puts underneath us. Because of the strength of the cash, I'd like to think we'll have a soft landing, that we won't have to collapse or do anything weird like we did in 2015, because the cash is remarkably strong still.
Then talk a little bit more about that correlation between the cash and the futures.
Well, we've talked a little bit about how frustrating it is that, there is no real way to force convergence when you have a basis like this, when cash is above futures, because there's no way for the long to go long futures and be able to figure out a way to negotiate how to, bring me the cattle. He'll have to wait till something like the 10th or 11th of July for that to happen. Well, a lot can happen between now and then, of course. Now, there usually is convergence with June at the end of the month. So we'll have to see once how that all happens, whether it's a little bit of both, where futures go up to meet cash, or maybe the cash comes our way a little bit. But until then, I think, I think last week I might have, fallen on the idiot's sword and said, hey, I thought the basis was going to be a lot wider than it is. It's $10. I thought the last part of this rally might be mostly cash and less futures, but maybe today I'm going to give myself a pass and say, well, now the basis is almost $20 in the north, and I think it's going to get wider. I think that the cash market will stay pretty good at the same time that the futures market will be searching a little bit for someone that dares to buy it.
So as you look at it all kind of coming together, beef cutouts were higher again once, as you and I are doing this on a Thursday. It's a wild ride over there in those cutouts.
Yeah, I ever heard the old phrase, the market will top the day the news is the best? I don't mean to be casual about it, because it's a big deal to me too. But you're right. The irony of all-time high cash the day that you flip the market over like that, I guess. I don't know. Next week, it should be an interesting visit. I guess right now, I'd like to think August cattle maybe would hold the 202 level, someplace around the 100-day moving average. I'd like to see where the recovery comes back to. I'm inclined now to think that, someplace at 208, 210, if we get back in there, I think that area would probably interest a lot of sellers. It certainly will me. I would encourage everybody to be careful. You don't want to do 2015 again.
Very well put. One wrap-up question. Prices of the sale barns continue to still be higher, though. As you look at everything that is lining up, what are your thoughts?
Just before our show, I was watching and did buy a few feeder cattle actually at a particular sale barn today. And while they're not quite as high as last week, still very, very high. And I have nothing against this cow-calf person that needs to make a big living. Go for it. You deserve it. But honestly, if you looked at the cattle crush for a number of months now, and the cattle crush is just a fancy way of saying what is the price of feeder cattle versus when those cattle are going to be fat, where live cattle futures are, factoring what the cost of gain is. In other words, using the corn as the third leg of that stool. The feeder cattle have been, either the feeders have been too high or the fats have been too low for months. So the first adjustment probably, in my opinion, would come in that feeder cattle market. Now, cash feeder cattle, still strong, still above futures. Cash live cattle and every auction that was there, and the bids, we had 229 to 230 today in the country, so we're way above the futures. But don't forget, futures and cash are not exactly the same thing, and they don't have to line up until the very, very bitter end, and sometimes even then they won't exactly. So at these kind of price levels, some of that old rule book thing doesn't work as well as it used to.
All right. Lots of good thoughts for folks to think of into this next week. Best way for them to get a hold of you, Brad?
kkvtrading.com is our website. Otherwise, our phone number is 712-722-0023.
And that's another edition of Cattle Chatter.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.